New York City. We're going to spend the next hour explaining what all this means for your money. That is the key to all this, beginning with two of the best in the investing business. Drew Canale, Chairman and CEO of Canale Trust, and Lance Roberts, CEO of Street Talk Advisors. Good to see you both. Drew, first to you. Here were the words. I was watching the market when it changed from 200 down to begin to go triple digit to the upside. Tools that could be used to provide additional monitor stimulus. Stimulus, that word stimulus, when he was talking about the coming FOMC meeting September 20th and 21st, that's what turned the market around, no?
No, that's not what we had both eyes on Europe this morning, to tell you the truth. And if you were looking at European stocks, they were looking very, very weak throughout the morning. About the time he was making his remarks, you saw the German stock market start to turn around, and I really think that's what turned our stocks around.
So, Drew, you think the market was more focused on Germany than it was on what Ben Bernanke was saying? I can't believe that.
Well, here you heard it first, right here on Fox Business.
Right.
But the point being is, where all these troubles began is when we started having worries about European bank stocks. If you really look at the timeline of this market weakness, it hasn't been worries about Fed policy. And if you really listen to Bernanke's remarks, what he's saying is the key to economic expansion going forward is policy, policy, policy. Policy here, policy in Europe. That's what he was talking about in that speech. Maybe he gave you some hope for September, but the real meat of the discussion was about government policy going forward.
All right, Lance, your reaction there. Do you think that investors were also keeping a key eye on Europe? As we also listen to Bernanke, we also watch Hurricane Irene and its expected huge impact on the United States.
Right. Well, no, this is something that, we've been talking about for several weeks now. Ben Bernanke announced that in the August early meeting, he said, we've got stimulus tools available and we're watching the economy. And I've been saying for the last couple of weeks that he was going to basically reiterate that today, because he's not going to front run Obama coming back from Martha's Vineyard with his new labor plan, his new jobs plan that he wants to unveil. So he needs some time. Bernanke needs time right now to evaluate where we are economically. GDP today coming in lower than expected at 1%, trend negative there. Manufacturing indexes all around the country now going into contractionary territory. He needs to evaluate that, see how the markets are going to respond to Obama's plan, and then that gives him some time at the next meeting in September to really talk about what tools that they might need to use.
Well, Drew, I disagree with you in terms of what turned this market around, but I agree with you in terms of some of your picks. You're going for some real steady stocks here. Johnson & Johnson, Coca-Cola, ConocoPhillips. Is it the dividends that you're looking at?
Absolutely. It's the dividends. The dividend coverage ratios are back. They're in good shape. You can feel good about, owning these types of stocks. Now, they're not going to mitigate all the risk here, right? But it's probably going to be a better place to be right now. And also, everyone should be looking to ultra-diversify their portfolio, even out of stocks and into alternative investments. You've seen what gold's done. We use MLPs, Master Limited Partnerships at Canale. They pay a very nice dividend. So that's where you want to be looking to, because until we have some major policy decisions made, you're just not going to see a whole lot of large economic growth going forward.
And Lance, are you still holding on to cash? Do you have stock picks as well, though? How do you balance your asset allocation?
Well, and again, talking about the economic front, we're very much watching this economy weak, and very likely we're potentially talking about a recessionary hit towards the end of this year, beginning of 2012. So that forces us to move into more, and just like Mr. Canale is talking about, alternative investments. Gold, cash is a great hedge against market risk. Fixed income is a great place to be. It stabilizes portfolios, but we never want to be completely out of the market because we're not market timers, but we do understand about managing risk. So in our stock portion of the portfolio, we want to be in basically big, large cap, dividend yielding companies with great revenue prospects, great management, because those are going to help that piece of the portfolio weather any type of market turmoil. Because when markets decline, they're going to pull down all stocks with it. You've seen this lately in these 400-point sell-offs. You've got almost the entire market down for the day. Great advice, great perspective. Lance Roberts, Drew Canale, great to see you both, gentlemen. Have a terrific weekend. Stay dry. Thanks a million.
Well, there are so many fundamentals and technical levels influencing whichever way this market is headed. We do wrap up the week with gains for the first time in some 4 weeks. Back to Sandra Smith on the floor of the New York Stock Exchange with more reaction to today's market news and the preparations there for the arrival of Hurricane